Okay, thanks very much to everyone for coming here. What I'd like to share with you this evening is 11 secrets to achieving financial freedom. So my aim today is to define financial freedom, to clarify what financial freedom means to you, and then to discuss 11 secrets to help you achieve your own financial freedom. So personally, I believe we're all striving for financial freedom, whether we're consciously aware of this or not, or indeed have a plan for its achievement. And these secrets I'm going to share with you this evening, they're very, very simple in their application, and they will also help you develop a plan to achieve this worthwhile goal. In fact, like Declan mentioned about his own secrets, I don't believe they were ever meant to be secrets. In fact, they're very, very sound principles, and I just feel they're being forgotten over time. I'm not sure why that's the case. Maybe people see them as being too simple, maybe they're not exciting enough, or maybe people just don't have the time. So, either way, I hope to wake you up this evening and get you back in control of your own financial vehicle. So, let's look at defining financial freedom. So, essentially, according to Webster's dictionary, financial is pertaining to the science of managing money, and freedom is restraint from the power of another. So in effect, financial freedom is having adequate money to meet all your needs, whether you choose to physically work or not. And that word choose is very important, because it's not about people having to retire, it's about giving people a choice. So essentially, notice that the definition doesn't mention anything about amounts of money, and neither does it mention anything about the symbols that we would normally associate with money. In fact, I'm sure we're all aware of stories of athletes, especially in America, who have earned tens, if not hundreds of millions of dollars over their careers, and yet at some stage would have ended up in financial difficulty. Mike Tyson is probably the most high-profile example. I think his career earnings were in around 300 million. So I believe that financial freedom is specific to each individual. So for some people, it might be about the number of cars or yachts that they have. For other people, it might be having more time to spend with their family or their loved ones. For somebody else, it might be just having enough money to ensure all their bills are paid for. So moving on, and this was mentioned already in relation to sales, but in relation to financial freedom, clarity is of vital importance. I know I said it already, but it's your financial freedom, not somebody else that matters. And in order to try and achieve your own financial freedom, you have to know what it's going to look like for you. So for example, if I was to talk about myself personally, my financial freedom would have a number of aspects. So there would be physical aspects, which would be optimum health. There'd be emotional aspects, which would be essentially high levels of happiness and joy. There would be financial aspects, obviously, so the level of money that it would need to be financially free. There would be business aspects, and in relation to business, is your business a tool, or would you like to leave a lasting legacy, or ideally both? There would be time. Time is another important thing, so more time to work on things that you're very passionate about. And lastly, social contribution and celebration. So social contribution has been obviously trying to give something back, and celebration then is just celebrating your own successes, no matter how little they are. So moving on, I'm going to now go through the 11 secrets to financial freedom. And to start off with number one, and that's to develop a net worth mindset. Now, it is said that this is the cornerstone principle to achieving financial freedom. Benjamin Franklin said that if you want to become wealthy, you either increase your means or decrease your wants, but ideally do both at the same time. So, how do you calculate your net worth? It's very simple. You add up your total assets, you add up your total liabilities, and you take one away from the other, and that's your net worth. Now, again, personally, your net worth is where you are today. And I don't believe there's any point in worrying about where you were 5 years ago, or where you feel you should be today, or where you feel you're expected to be in 5 years' time. Now, one of my favourite quotes is from Donald Trump, and Donald Trump incidentally uses money as a way of keeping score. And Donald Trump says that I try and learn from the past, while I plan for the future by focusing exclusively on the present. That is where all the fun is. So, we've just gone through one of the secrets, and let's look at where we are already. We've determined what financial freedom looks like for us, which is essentially our destination. We've calculated our present net worth, which is essentially our starting point. So we know our starting point, and we know our destination. And the next 10 tools will hopefully get you from one to the other. So moving on to number 2. Number 2 is to prepare a monthly cash flow statement. So essentially, it's to establish an accounting department for your own personal finances. Just basically record what's coming in and going out. You don't need an accountant for this. I'm doing myself out of work here probably. You don't need an accountant for this because essentially there's a lot of free or cost-effective software out there that will plug in with your online banking. What you do need to do, and what's very, very important, is that you need to plan a certain time and a day every month to focus on this task. That's all you have to do in relation to this. Number 3 is manage your credit. Again, there's no rocket science here. Focus on paying off your expensive loans first. And credit cards would probably be the obvious example there. Secondly, make sure your credit works for you. So essentially, to give a simple example, if you have €1,000 in a deposit account and you're getting less than 1% after tax, and you have a mortgage that you're paying 4 or 5% on, well, you got to ask yourself, is your credit really working for you? And lastly, where possible, because it may not be possible for everyone, but where possible, be creative with payments of loans and long-term loans and mortgages. And I'll give you an example of this. The example is a bi-monthly mortgage plan. Now, essentially the theory behind a bi-monthly mortgage plan is extremely simple. Effectively, you pay your mortgage every fortnight instead of every month. Okay, so there's nothing too complicated in that. What happens is you end up paying your loan off earlier, and you're also making one extra mortgage payment a year. So I'll run through an example that will show you how powerful that can be in practice. If you take a €500,000 mortgage for 30 years at an average interest rate of 5%. Now, if you were to make regular bi-monthly mortgage payments, you would pay that mortgage off 5 years earlier, plus you would save €84,000 in interest. Now, if it's a person's, let's say, private dwelling, that €84,000 is generally going to be after-tax income. So if you gross that back up using the higher rates of tax, the savings could be up to €175,000 over the term of the loan. And that's effectively 35% of your original capital amount. So it's quite substantial.